Okay, so what I wanted to go over, as you know, we've been talking the last few weeks, demand zone, supply zone gaps, uh, together with our Fibonacci's. All of this is very, very critical, right? Everything that we do is extremely important. There's nothing we can neglect out of all the lessons we've done so far, right? We started with the basics, the zigzags, support resistance, and then we started to add the dynamic support resistance, which is the Fibonacci retracements, and then we went into supply zone, demand zone gaps, which are again another uh, support resistance in a way that you identify through what the institutions tell you, right? They leave their breadcrumbs, and that's what you want to do. You just want to follow their breadcrumbs. So last week, if you recall, in the spies, I drew a demand zone down here. So that was, in our last session. And then what happened? 2 days later, this is where we came. The price came right there and reversed. No questions asked, right? So the reason why I want to show you this is for you to grasp the importance of identifying these and drawing them so that you are prepared. You are prepared to take action when the opportunity presents itself. Together with the fibs, right? The last move we have is a down move, and we did the 38% retracement, 50, 61.8, 70%. Right? At all these levels, you're starting to see action. Like we come to near 38, we have a hard time. We go to 50, we have a hard time. We go to 61.8, we have a hard time. 70, we have a hard time. All of this, they're struggling. Now, until we pass 78.6, we're still saying this the bias is still downside, right? We're not redrawing it to the other side. But then we don't have a new anchor to move, the downside of the fib. And then over long term, if you look at the daily, we have a daily trend line that price seems to respect. We touch it, we touch it, we touch it a couple of times, and then we're touching it again a couple of times here. So as you see, we're closing outside of this trend line. This trend line in the past it tried to go above it, but it didn't close above it. Now we're closing above it, which makes me want to think maybe we are heading to this supply zone before we go down. I still have that downward bias. Uh, Here we have a gap. The reason why I left this gap is just to have this conversation with you guys. We left this gap from a couple of weeks ago, right? So on the 11th, we left this gap. And then after our session last week, we closed that gap, right? When we closed that gap, we completely closed it and went to the other side, right? It did not even bother to spend time to try to reverse our support. It just says, I'm just going to blow right through it. So now we don't need this gap anymore, now that you have seen it. This gap here, no need to draw it because, very next day we've closed it and then we have no more gap. Now we just have to be concerned. We have a supply zone up here. Technically, we have this whole area here as an additional supply zone. Normally, I don't like to stack them on top of each other like this, but you have this as well. So this whole range could be an area where we struggle to get through, because once we get through this range, which is here, then the next thing that will stop us is up here in the 420 to 430 change area, this daily supply zone that we have up here. So hopefully you're seeing how everything is coming together, right? Everything is coming together, and the reason we draw these is because they really work. And I'm not removing it because we haven't closed it completely. We touched and gone. if there are additional bulls, right? If we're not out of this dead cat bounce yet, we might do one of these again. Come down fully, close it, and head back up, right? We could do something like this. So keep that in mind. Keep drawing them. Keep them focused because they're really, really critical. And that's what you have on your drawing all the time. Down here, this for me, this is an area of demand zone in the Qs. This is the area. We're not there yet. But up here, if you're looking at this retracement, it's playing around with that 78.6. It's literally playing around with it. Until we're done with that, there's nothing we will do. Because what will happen then at that point, this has recovered. Then if you look at this, it didn't close below 38.2. This one, close to it, but if it's close, it's debatable. This could be the next potential thing that we will look at, and we will eliminate this one, but I'm not drawing it yet because I want to be convinced that we're out of this area. To be out of that area, we have again similar supply zone, very, very similar supply zone that we have to look at. We're close to it. We're somewhere in that vicinity. What do? This is what we have to wait and see. So we have different areas that we're looking at. I leave these gaps for your purpose. Usually, if I see them closed, I want to eliminate them. But because I know we have this session, I leave that gap there. And the other thing you should notice is drop, consolidate, rise. This is, what is this? It's a demand zone, right? So don't forget this demand zone. We have two. We have one a little bit lower. We have one up here. And I don't go for precision. I just say, hey, where is that consolidation area? It's somewhere here. So could price touch it and reverse? I don't know. So I wait and see. Make sense?
Yep, definitely.
Yeah. Okay. Any questions?
Nope.
Okay, so I'm gonna switch over to homework then. You can start sharing your screen and we'll do your homeworks. And then, after we do this, maybe this week, if you're comfortable, or next, I want to add another piece of information. This one, I use it, but I just use it to kind of confirm a few things. So we'll dive into an additional indicator, right? All of these indicators are lagging indicators. That's why I like cash is king. Cash tells you right now what's happening. Right? There's no indicator that's calculating 10 days back and saying something. So, but sometimes there are some indicators that will kind of support your idea. We will add that to your tool belt. So that's what we will do. Okay, so who has not done a lot of sharing of homework, but has a few things to share? I think that's the person I would like to start with.
Hey, Beanie, I just have a quick question, real quick, because I'm just looking at this chart right here where we have that demand zone. I guess can the same area around the 21st be also a kind of a demand zone as well?
Where are you referring to? We have this demand zone. Where else?
The second demand, or right below that one.
Okay.
So we have that the 1 hour demand zone you've drawn on I think it's the 10th, right there.
Okay.
And if you look back on the 21st, it's kind of like around the same area. You see it's like drop, consolidate, rise a little bit, and then drop again on the 21st. No, the 21st of December.
December
If you keep,
21st. Okay,
yeah,
here?
before, yeah, a little bit before. You see that area where it's drop, consolidate in that zone for, and then rise a little bit, and then it drops sharply after that. But because that's already a demand zone right there, kind of, yeah, that doesn't that
So
overlay kind of have overlap with the other one, and then would you consider the second one just filled because of the first demand zone? Because they're kind of overlap, right?
no, so this demand zone was created around the 20th, right? And after that, price did what
Yeah.
it needed to do. It did not act as a demand zone. It blew right through it. It did what it needed to do. So this is no longer, to me, it's no longer a valid demand zone because we're on the other side of it. If so, here's what I want you to think about. If price comes to this demand zone and reverses, then you can say I'm going to keep it because I could do the same thing again. But if price
Mm-hmm.
does this can never act like a demand zone anymore. There's no more demand up here. There's no institution that is going to buy here from down here. Then that means they're chasing. They always want to buy low, right? A demand zone is where you want to place a buy order. You're not gonna place a buy order away from you to the upside. That's kind of foolish, right? You want to buy low, sell high. So your demand zone is always below the current price. If it's not, then that means you've blown through it, right? I mean, it's a good question. Like
Mm-hmm.
this was a valid. This was a valid demand zone right here.
Yeah.
If you drew it here and say, here's a demand zone, fantastic, I love it. The next day, you blow through it. What is that demand zone doing then? It's no longer a demand zone. Make sense?
Yeah, it
Yeah.
does. I just I didn't like I think that's cause I was just comparing it with my own because I try to set up my cues as well. So I
Yeah.
just wanted to understand. I didn't catch that. I left it. So I wanted just to confirm my
Yeah.
thoughts there. So thanks.
Yeah. And up here, it's a new move, right? We've done the downside, we've reversed, it's a new move. Now you can take this one.
Mm,
I mean, I have two, so I don't have to worry about drawing this one, but you can even draw another one down here, right? You can draw another one down here and take it from here. Now, this one,
and
you
you
can
would
say, sorry?
no, go ahead. Sorry, don't mean to interrupt.
No, so good. This one, you can say it started here. We've already
Yeah, that's what
come
I
into,
was gonna say.
yeah. So this started down here. We've taken care of it. If you say,
Mm-hmm.
I still want to see what's happening, I want to leave it, that's okay. Because we haven't gone to the other side. Right? It's
Mm,
still support. It
yeah.
stops being support when it's on the other side. So I'm okay if you draw it
Mm,
this way and leave it here, or if you
yeah.
push it up here. Either way, it's
Okay.
just, again, remember, the most important thing about these drawings, one day price does this, you're not entering, right?
Mm,
For me, it just says, bleep, 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 I need to do something.
mm,
Then I want to see my hammer. I want to see my fib level. Right? If you look at this, you know, this dashes is actually the monthly. This is the
mm,
monthly fib, right? So I know because I know these thick dashes are monthly. It doesn't matter what time frame I'm on. When I'm down here, I say, oh, this is a 61.8% retracement, right? This is a good area of reversal. Look what happened. One, two, almost three times. It's reversing at that 61.8. That 61.8 is really, really holding in tech. Here, here, here. I mean, this is really holding.
mm,
The minute we blow through it, Man, this is where you're coming down to your pre-COVID highs. This is where you're coming down to your COVID lows. But
Mm.
so far, tech has been very strong, uh, and broader market even stronger. Broader market is not
Mm.
going even to this low. My expectation is that the rest of the market is going to catch up to the Qs. So if the Qs go to COVID low, the rest of the market is going to go to COVID low. I don't think they're going to go just because this is 20% and stop at the 70%. I think if Qs go there, the rest of the market is going to go there.
Mm.
So we don't know yet, right? Right now, Microsoft's earning, I think it was a miss.
Mm.
I don't see what the extended. It was up and down, so it's kind of hard to tell.
Mm.
Right now, it's kind of hard to tell, but we shall see. We shall see in the morning. But again, why I'm saying this is when price comes to your zone, it's a signal. It aligns with Fib. It aligns with one of those four conditions, like a consolidation
Mm.
area, and we break out of it. Railroad tracks, engulfing, or a hammer, or even if you want an inside bar. If you recall, we threw that one out there. So
Yeah.
you can do that just for a lesson. Uh, this is an engulfing or an outside bar, whichever term you want to use, because the highs and lows are outside the highs and lows of the previous bar. They completely engulf it. And then if you get one of these, this is an inside bar because the highs and lows are inside the previous bar. So the way you trade both of these is slightly different.
Mm.
On the first instance, if you're coming down to an area of value as a support, when you break the high of the previous bar, when you start to make this engulfing, or if you wait after you make the engulfing and you make a new high the following bar, you take that trade. And the opposite happens at the area of value in a resistance area. When you break the low, you take it, or you wait for this bar to complete and you make a new low, you take it. An inside bar, uh, you can take it when you break the high. If you're at area of value support, you break the low at area of value resistance. Right? You don't take the other side. If price comes down to the supply zone and you have an inside bar, you don't take it to the downside. Right? That's just not the rule. It might work. I'm not saying it never works, but as a rule, you're saying this is my area of value. I'm expecting price to go up. I have an outside
Mm.
bar and an indecision that follows. If I break that indecision, I take it. Basically, that's what you're doing with those. So
Yep.
you have enough conditions. Really, you have enough conditions, and uh, just in case you're worried that look, when I come down here, I don't get enough engulfing railroad track or a hammer. Uh,
Mm.
if you take this and change it to a 2 hour bar, this same area, right? You can say, hey, if I start to combine, I get like railroad tracks here, kind of. So if you start to combine multiple hours, you might get what you want. Or remember, consolidation, break out of that consolidation, right? That also works because you're getting that
Yeah.
consolidation. You break out of that consolidation, you have this trade. This is actually a beautiful trade if you had taken it, right? Because it's
Mm.
set up. It's set up right.
Yeah.
Yeah.
At some point, I would love to understand as well. I saw a lot of, I don't know what you call them, but the three bars that are kind of stacked next to each other, but they're kind of on an upward motion. Um, Kind of like how you have it right there on Friday the 9th. I don't know if you can see that. There's like those
This
three or
one.
four bars, or those. Yeah,
Friday.
yeah, that right.
You have three
And I
like
saw those.
this.
I was
On the,
curious.
like here. You have here. So that's called three white soldiers going up or three black soldiers coming down. And that's also a bullish indication when it's three up like this, or bearish when it's three down like this. I don't want you to start getting into too many
Okay.
types, right? Let's just focus on a few. I believe I've given you enough, right? Come
Mm,
back to me and say, what you have given me is not enough. Then I'll give you more, right? I want you to
okay.
do that, like, and say, this is not enough.
Okay. Sounds good.
Yeah.
Yeah. The only reason I called them out is I saw them pretty much on every chart on Friday as I was kind of just doing a recap of my week. I think I saw the
Yeah.
same exact time on SPY, on Q, on a lot of the charts. Since I was curious, wanted to just get your thoughts on what that meant.
Okay. So if you had drawn this demand zone, if you had drawn this demand zone, you're in a downtrend, but you say, look, this is a demand zone. I'm going to take a chance, right? And so when you get this bar here, you have your hammer. It's a doji, but you can treat it as a hammer, right? Because the hammer has more body, right? If I let
Mm.
me see if I can try to draw this. I'm trying to use. I'm trying to just trick it. This is a hammer, right? Now
Mhm.
your doji is going to be more like this. That makes sense?
Mm. Yeah.
Not a good drawing, but it's still same same outcome, right? Same outcome.
Mm.
What it's saying is uh, it opened up here. Bears pushed the price down. Bulls rejected them and brought it back up. That's what a doji or a hammer is. When it's the reverse, it's the same thing. Bulls took charge first, and then bears said, "Nope, we're gonna take price down." So that's a concept you have to think about. So from that perspective, then this doji, you can treat it like a hammer at an area of value. You have your entry. Boom, you take it. Here, right? If this was something you had identified as an entry, consolidation. Here, consolidation. You have enough
Mm.
entries, right? Your Fibonacci's. You have enough entries, right? When this demand zone, you could have taken it, like I said, if you said, look, this 61.8 is holding. So I'm taking this to the upside because 61.8 is holding. You take it to the upside. Right? And what are you looking for? You're looking for some indication. First time, before you even draw the demand zone, if you just said, I'm taking it on the fib, consolidation, you take it. Hammer, doji, you take it. Right? Consolidation, you take it. Because this
Yeah.
consolidation, even without demand zone, you can take it. Why? Basics. Basics. Higher low, higher high, higher low, higher high. Right? You don't have to ignore the basics just because we've added some complex, sexy things, right? You don't have to
Mhm.
ignore the basics. area of value. As soon as you have a pullback that terminates, it's an area of value. Consolidation, you break consolidation, you have an entry because you believe that 61.8 was strong. So far, they've been right. Right? Anybody who has traded that 61.8, first time you don't trade it because we've been in a strong downtrend, but next time, boom, I take it. Next time, I take it. I take it. If you've been right all the time, if you have taken those, because that's why we've learned to combine everything. Right? It's not just one thing. We're combining everything that we've learned. Okay?
Yeah, that makes a lot of sense. I didn't even see the 61.8 on the monthly retracement. That's a good pattern to see. Now that you pointed it out, I see it across like the entire this fib. It just keeps bouncing from that area, and it's like right below that. We even have a very strong demand zone right below the 61.8.
Yeah, but it's called multi-time frame analysis. Unless you do multi-time frame analysis, it's hard to take a position. You have the monthly wins for me, right? Because monthly decides which way I'm going. Now, if you are putting the trigger on the daily bar, not the hourly bar, maybe then you look at a quarterly bar as well, right? But for me, monthly is good enough. Right? I let the monthly tell me what it wants to do. And if the monthly is not closing below the 61.8, every month that we've been there, October, November, December, January, we have not closed below the 61.8. They've been holding really, really strong. If you were to trade the monthly, you have a hammer. If you take that hammer for a few days, you are right. Your stop hasn't been met because you're not going below this. I mean, this is a very tough trade to be in because you see a little bit of winning and then boom, that collapses. But the hammer is there for you. So multi-time frame. You go from the daily, from the monthly to weekly to daily, and then to your pull the trigger chart. You look at your pull the trigger chart and you decide what you want to do. All right. Time for somebody to share screen and let's go. All right, we can see. Please proceed.
Okay. Real quick before I jump into some of the other ones, I think from your drawing, did you have this as a pretty strong demand zone here, Beanie? From this is from October. I just wanted to confirm as well.
It's definitely a demand zone.
Okay.
Yeah.
Okay. Okay, sounds good. Let me jump into, I think Netflix was one. Yeah, I think this is a good one. So let me zoom out because we're actually getting close to a major supply zone here on Netflix. So I think maybe this is a really good example. So I went back. So maybe let me go back to my monthly. So just to see where we are at on this chart, because this is such an interesting chart. We've blown past the pre-COVID nose for Netflix. That's here, or pre-COVID high right here in purple. It's at the 398. So we blew past it when we had that huge move down after they kind of had a huge miss on earnings. And then ever since then, we've just had like a steady climb up. So right now we're kind of still, I had to essentially redraw the fib for Netflix because it just blew past the 78.6 and it made a new low, right, from this. So I essentially redrew my fib for a downward fib. And then we've kind of in that approaching that green zone with that 38.2 retracement. So let me jump into the daily real quick so we can kind of walk through the demand zones and supply zones. So there's three main gaps that I identified. There's this main gap right here that we formed in January. This is actually not related to recent news. But then briefly after that, right, we had that just horrible earnings in April, and they just had a huge gap down. And essentially, ever since that low, we steadily been creeping up, and we've pretty much like closed this gap now completely. So we're right just barely above that gap zone right here, and close that gap. So I went ahead and deleted that, but just notable to point that out, considering where this chart is at. Then there's 3 gaps outside of this big one left. There's one up here, which is a pretty big gap, and we're kind of approaching it. And then there's a gap was formed down here. This is the hourly, which is why you don't see it on the hourly, or on the not daily, but on the hourly there's a decent sized gap right here. And then there is this one. You can kind of clearly see there is this gap here. In terms of the demand and supply zones, I go back right here. The supply zone right here is the all-time high, I think, for Netflix right here. Ever since then, of course, we've had a huge just dive down. So clearly a huge supply zone right here. Some of the other supply zones have already been filled. So you can see right here, this was a supply zone, but it hit it right after. So I kind of just removed it. The next supply zone.
But why didn't you use that where your mouse is right now? If you just go to that area,
This one?
why don't you just draw a new one there?
Because I just kind of counted it as the same one. So I drew it. So the way I drew my supply zone, I just did from here to like this.
Yeah.
And when I looked at it, I just said, hey, like it pretty much spent like 1, 2, 3, 4, 5, 6 days and then collapsed already. So I kind of considered this as filled because there's just so much time spent here.
Yeah, I love your analysis, right? I think this is beautiful. This is why we have these conversations. Now, I wonder what that would look like if you went to an hourly chart.
Let me go back. There we go. Yeah. So we can kind of even see up, down, up, down,
Part of the reason why this is a bit of a trick question, right? So if you narrow that zone based on the hourly chart, now it's it's a little bit slightly higher because the consolidation happens way up top. No, that consolidation.
Even higher? You mean
Like
that's
this? I mean, not that small, but it's in that range where the consolidation happens.
Mm.
Right? If you let's zoom in and see the start of this zone. Yeah, now you see the consolidation. It's happening right there.
I see. Okay.
And so it's a tricky question, right? So and it was not meant to say you were right or wrong, but to give you perspectives. Like where you're looking at it makes a big difference. So if you're pulling the trigger on the hourly, I always suggest you don't stop at the daily. The daily is stronger, but then always take a look at your hourly. Because the hour chart tells you a lot more of the actions that took place.
Yeah.
And so because you're pulling the trigger on the hourly, this is why I'm making this suggestion. So if you do that, you might leave this one sitting.
Yeah.
Even
So
higher. Even higher between the two zones. Next, to the left of it.
So you mean like
to the left? You rather left.
This way?
Yeah.
Right.
Whichever way is left for you. So that's right. That's a lot left.
Okay. So you mean
go the other way.
Leave it.
No. Go the other way. Yeah, that no, next to it. Yes, that area.
Yeah. I guess this one does it twice though. Would you still count it now that you
Yeah,
look at
just
it as
take that whole thing. To me, I would look at that whole thing as consolidation.
consolidation? Okay, you
Oh,
wouldn't look at it as like, hey, comes here, goes down more, and then down.
uh, too close together for me, right? Again, it's a matter of preference. These things, it's a matter of preference. But I
Okay.
like them because it gives me an opportunity to kind of be cautious next time,
Hmm.
right? Yes, you're right. You could say, hey, it's the same one. It's done. You wouldn't be wrong.
Yeah.
Uh, I
Especially
prefer to.
considering this.
Yeah, that one is done, right? So that one, it's fall, kind of rise a little bit and fall. That whole area is taken care of. It just blew right past it.
Hmm.
But the next section,
Yeah.
hourly chart just too close together. Just a thought, just something to consider. But it's good.
Yeah. That's definitely a good call out.
Yeah.
What do you think about this zone right here? I guess this is kind of the same, right? This is the same consolidation zone that we drew. Or would you draw this as another supply zone right here as well?
Sometimes when they're too close together, I skip them.
Yeah.
Uh, I prefer
Yeah.
to draw the one that I'm gonna hit first.
Yeah.
Right? If I skip one, I'm gonna skip the like for supply zone. I skip the higher one.
Yeah, you skip this one. So you'd move this kind of like,
Yeah, I because that's the one that's going to be the first to come into the
yeah,
picture.
yeah, that makes sense.
Yeah.
Definitely. Okay.
You just have to remember, right? So if price blows through it temporarily and reverses, you have to remember maybe there's another zone that I have skipped. But that's
Mm.
okay, right? Again, it's not it's just a caution signal, right? It's not anything else.
Yeah.
Okay.
No,
And
yeah,
then you
that's,
have this big gap here, but it's been
yeah.
taken
Then,
care of, right? That's probably why yeah.
yeah. You mean this one right here?
Yeah, yeah,
Yeah, this one's been taken care of. This was the big gap once they had
yeah,
that terrible earnings, and we pretty much steadily closed it.
yeah.
You're this supply zone right here as well, because I just kind of this consolidation right here. I called that a supply zone.
Okay.
And then and then we had a couple extra other gaps too, like this one we closed. So I kind of deleted them at this point and only kept the gaps that are open. And then right here we're just approaching right now just this supply zone. So it's caution area. We could potentially blow through it, or we could reverse. It's right around my 38.22, so it's that area of value. So I'm just gonna wait and see, especially since because this is the first time we've closed this huge gap ever since we made it last year.
Yeah. And
Um,
then I'm also wondering why you don't have any more demand zones because if you just said we're at 38.2 first time we close this gap, so I'm assuming the bias is still to the downside. So we
yeah,
should have more uh, demand zones at this moment.
yeah. The near-term demand zones, they're actually like these ones. I kind of just, I guess this is you can consider this whole consolidation zone, but I just saw like you go up, collect more, go up, collect, come back down, go up, come back down, and then shoot back up. So I kind of just, I consider this entire zone right here like filled because of just so much like up and down movement in this area within this
Filled
zone.
from where, right? So I think you just have to figure out from where. Because if
Uh,
that whole thing to me is a sideways movement, I don't really see up, down, up clearly, right? I see sideways movement.
so would you consider this whole area a demand zone?
I would, because if price was bouncing in a few days period, it's just bouncing in that area. Right? That's what it's doing. At, you know, That at least that's how I want to prepare myself. If nothing happens when price comes down here, it's okay,
Mm.
right? Nothing has to happen, but at least I'm prepared. That's what I
Yeah.
wanted to practice is being prepared. It's okay that preparation sometimes doesn't work out, but at least you prepared. If price goes there and stops, you know why.
Mm. Yeah, that makes sense. I guess
Yeah,
with that thought, yeah, this would be a demand zone right here as well. Just kind of this
yeah, that,
consolidation.
yeah.
This this right here.
But that one where it's a bit tricky, right? It's where after the gap down,
Hmm.
it forms that first bottom. Yeah, right there. Oh, you just
Yeah,
went first bottom.
this one.
Yeah, right there. Right there, you had a demand zone when it went up, but then you came back down and filled it.
Yeah. So I just didn't draw it. So would you?
Yeah.
Okay. So this one you would consider like a
From
decent
there, it's
size.
it's filled, but then afterwards, then you have that consolidation. So you can say, you know what, I filled it, but then I stayed in that consolidation. But
Yeah.
again, that one is too close to the other one, especially since the other one
Hmm.
is so wide.
Yeah.
Like if you don't draw it, it's okay.
Okay. Yeah. Especially since it's above it, like you said, you'd
Yeah,
want to get the first one that
yeah,
it's gonna hit. Whoever comes this
yeah.
way.
This one is quite wide.
Yeah.
It wouldn't surprise me if complete closure is somewhere around the top third,
Yeah. Right here.
somewhere around there, right?
Yeah. You can kind of see it like bounce right around this area too. Here, 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 here.
Yeah. So next time
Yeah.
it comes down,
Mm.
what
Okay.
happens? That's what I'm interested to see.
Yeah. The one other one I did want to draw is this one right here. We had this gap down a little bit, and then we had a clear, just bounce up.
Yeah,
So I kind of drew this one right here as well as a demand zone, and then you can kind of see it try to come back to it right here. But then it immediately reversed pretty strongly. Not even 50% of the way, but it did. Um, I also kind of drew this. I wanted to show you. I know that we're kind of just doing supply and demand, but I thought this was a nice flag on a Friday, kind of as it was consolidating in this area right here. Um, and then, um, unfortunately, I was going to paper trade, but I saw the next day um, kind of just gap down, kind of just reversed. So I was like, okay, um, maybe
which
this
way
isn't the
did you
right.
want to trade it?
I kind of wanted to trade it up,
Yeah, that's good. That was the
but
right.
it
That
just
was the right trade.
yeah, because I was going to enter like here, but it didn't. It didn't really happen. At least not
I
for a
just,
while. So I kind of just let go of it. Yeah.
I like the idea. I just have one personally have one problem with it, and
Okay.
that doesn't seems to be an area of value where I want to enter.
Yeah, that too.
I want to enter as close to the low as possible, right? When there's a pullback, I want to enter where that pullback terminates,
Mm.
not where the pullback starts. But as an idea, there's a flag, great. But be mindful of where you're entering your trade.
Yeah, the way I was looking at it, I said, okay, we're on the monthly, we're kind of by the 23.6. On this specific fib, we've already kind of, we're actually pretty high. We're close to 78.6. So actually, from that perspective, yeah, we're very close, especially to trade this to the upside, because you'd want to go the opposite direction from here,
Yeah,
technically, according to your, yeah,
yeah,
yeah. But yeah, I didn't end up taking it even because I would kind of enter, somewhere around here at the top of the flag if I'm taking it as to the upside, and it never did really make it, not, at least not for a while. And then we got to this day, and then the next morning it gapped up. So I just kind of, this was earnings, and so I just left it. Then it kind of just like the boat.
One thing I'll tell you when you start trading, I don't like taking a new position if there's earnings in the next
Mm,
5 days or less,
yeah.
because I never know which way the earnings is gonna, right?
That's true.
Like, so I'm a little bit more pessimistic when it comes to trading before earning.
Yeah, that's very true. It does create a nice gap though. So now I know eventually
Yeah,
I have if I step back, there's a supply zone here and then there's a gap here. So it's going to bounce in this zone, obviously for a little bit. It sounds like, at least for a little while, until we pass through this. But even after that, then there's this demand zone right below the gap. So it's going to be interesting how this moves over the next couple of weeks.
yeah. I think if the whole market goes up, they will go up. If not, they will collapse.
Yeah.
Yeah.
Okay. Nice. Nice.
All right.
Uh,
Tweak. What I want you to add is if you go to indicator and look for MACD and just add the standard MACD indicator. That's what I want you to add, and then I'll tell you why we're adding these.
the one that says MACD strategy.
No, it just says if you type in MACD, it the first thing you see is moving average convergence divergence.
Got it. Okay.
That's the first thing you see.
Yeah. Okay.
And a
Okay.
little
I see.
teaser for us is let's see. I don't know if I can see this. I don't. I leave the histogram off because that's not where the action is for me. Right, the action is the other two lines, and uh, even the other two lines, I don't care that they're two lines. You can even leave one off if you want. Right, doesn't matter which one, but you just leave the two on for now. And so the teaser is when I want you to notice something here. And maybe if I draw this and someone notices it, you can tell. What do you see? This is your teaser for next week.
Hmm.
So, okay, I won't draw
Yeah.
too far for you. Yeah, go
Is it
ahead.
just the general direction
Okay,
of
what?
the chart? Like,
Okay.
hey, how is it going? Generally speaking, it sounds like it's like um, it follows like the pattern, right? So you see move down and then kind of a consolidation, a slight move up, then a consolidation, and then a little move up, and then another set of consolidation, and then that little dip like a snake, and then it just kind of follows the pattern. I assume it has something to do with
Okay.
like the reason.
No, not really.
Oh, it
So,
doesn't.
if you see the
Okay.
order of this confirmation, this is going down, this is going up. So right there tells you this is not following.
Mm.
But what I use it for is quite interesting. I use it for something that a lot of people don't use, but some do. When price is making a lower low, this guy fails to make a lower. As you can see on this move, on this move, it does make a lower low. On this move, it's going in the same direction. But then the next move, this guy reverses. When you see this and you get a hammer, you can take it to the opposite side. This is where you can take a reversal. Remember, I always tell you don't worry about reversals, take continuations. This is where you can take a reversal because this has told you if it lines up with everything else. If it lines up with everything else. So this is just a teaser. I know I haven't gone into enough details, but now that you have prepared your MACD on your chart, this is how we're going to add to it.
Interesting. I'm excited.
Yeah. And you can play around with some of these numbers, but this is good.
Yeah. Okay. Sounds good. Yeah, I'm excited to.
Yeah. I was gonna say, is it worth like trying to paper trade with like futures on like Sunday or something? Is just like as a solution to not having the time during the week during the trading hours? Is that even like, is that a good opportunity or not really?
If you want to practice how to place a trade, yes.
Okay.
But that doesn't give you the real actions, right? So it's kind of hard to make a decision and say, oh, on Sundays this is what I've been doing, so let me jump in the market on Monday.
Yeah.
And
just trying to find like a time that works to trade, paper trade, right? Live versus like.
Well, so if you think about it this way, if you don't have time to paper trade, do you think you'll have time to trade with real money?
I think yeah, good question.
Yeah, you have to treat this paper trade as real money.
Yeah.
And the lesson that I give you is it works no matter what time frame you use. So if you are struggling to make a decision to find 5 minutes every hour to look at your chart, not today, right? When you get to that level, all you need is 4 minutes at the bottom of every hour. That's all you need, right? And that once you know the chart, once you only work like on 2-3 charts, all you do is let me see if I can show you if you can see my if you can see so hold on. You see my chart on my phone?
Yeah.
That's all I need to see. Right? Because I've been studying this chart the night before and the morning before I leave for work. I know what the chart looks like. So this is all I need to see because I already know what are the conditions for me to pull the trigger.
Yeah. Okay.
So I want you to plan for that.
Yeah,
plan for that.
Yeah, that's a really good point. I think right now the issue is that like it requires so much like rethink and like time to just get oriented every time. So I think to your point, it's more being like efficient and familiar with so it's not like a new process of rethinking every time and just validation.
That's why you pick three symbols at most.
Okay.
You can make a living trading only SPY. Only SPY.
Yeah.
I'm talking about real significant living, right? Only one ticker because it moves enough throughout the day. So don't try to find what's the next Tesla that's going to move $20 a day. Don't worry about that. Because $20 one contract or $1 20 contracts, same result.
Yeah.
Right? Same result.
No.
Okay.
Yeah. And so focus on 1, 3 at most. Know those so that when you're like this, when this is all you can see, you know what to do. You know, up here I have supply zone. If price touches that every hour when I look at it for about a minute, you're only doing one chart, you only need 1 minute, right? Even not that. If price does this, I know what to do. The other thing you can do is set alerts, right? In the morning, you set alert. If price does this, I want to go to this side. If price does that, I want to go to that side. Set an alert, and you don't even have to look at your chart. When the alert triggers, it beeps your phone. Then you look at it on your phone. If it's what you're expecting it to do, because the rest you've already looked in the morning, you don't have to look at it again. You know what to do. You just log into your broker, pull the trigger, go about your business.
Yeah.
Right? So that I'm teaching you so that you can be at that level. So if paper trading on every hour is difficult, switch to daily. Make your daily your pull the trigger chart. Because what happens is you need the daily to close, right? So if you get an engulfing like this at an area of value, we come to 50%, I have an engulfing. The very next day, you place a trade right above that bar. You place a trade, you go about your business. You have your entry, your stop, you're gone. You don't even have to monitor it. The only time you look at it is at night when you come back. How did the day go?
Yeah. Okay.
The next morning before you leave for work, how is the day going? Right? Is it starting right? What does that? Or you can look at the futures. If you're trading SPY, you look at the ES futures, and it tells you what it's about to do for SPY, where the market is about to open. So you just take a look at that, and you're done. Same entry rules, just a little different time frame.
Yeah.
And when you're trading the daily, it just requires a bigger account size, not to take huge risks. Because your gaps, I mean, you're like if you're trading the SPY and you're trading this guy here, this bar is a $20 bar. So your stop loss is like $21, $22. So you're just taking less position, but same setup. Nothing changes. Area of value, engulfing, railroad track, hammer, flag, we enter. Boom. Zigzag, we pull back, we form almost like a hammer. If you say this is a hammer, I'll take it, boom, you take it. You place your trade and you're done. So you have the tools. Even the time that you need to pull the trigger on the tools, you just change the time frame.
Okay.
Ideally, I want you to go to 1 hour.
Yeah.
More opportunities and smaller stops, quicker wins.
Yeah.
A $20 stop requires a $40 move, right? So.
Yeah, that's true.
Yeah. What were you gonna say, man?
No, I was gonna even say like you don't also have to trade every day. Like if you know one day is like, and then I haven't even tried it, so maybe this is not even good advice. But maybe I feel like some days if you know you're gonna be super busy, like maybe you just tap out and say this is not gonna be my day, like, and then you just reassess the next day and then restructure your plays. I don't know. That's kind of what I was thinking because like every day doesn't have to be a pull the trigger day. Even the chart will tell you. I feel like sometimes. Like, hey, it's not in an area of value. Like, there's nothing to do here, for you at least, based off our rules.
So if we're playing to the upside, this day is not a trading day. 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 This day could be a trading day, as an example.
Yeah.
And so you're not trading every day. That's one. Two. When you're trading, you should log it so that you know if you've made a mistake. That's the only way you know, right? Journaling is extremely important. But just keep in mind, you're not trading every day. So if you're having a difficulty, do the daily.
Yep.
Do the daily. Unless you start taking trades, I think we've been at this for long enough. I want you to start thinking about really being serious about taking trades. paper money trade, right? Not real trade.
Yeah.
But consistently taking trades. If you're trading the daily, it might be every 7 days that you have a trade. So it might be 140 days before you have 20 trades. That's okay. As you get
Yeah.
better and better, and you know, oh, I can go down to the 1 hour because I know every day I can get 2 minutes. But I look on my phone. Like between meetings, I'm walking. I can just take those 2 minutes, right?
Mm-hmm.
Or you say today is extremely busy. I'm not going to even bother.
Yeah.
Yeah.
For
Makes sense.
us, right, because we're busy, this is just to supplement, right? This is just supplemental income. It's not
Mm.
for living. But
Yeah.
my goal is to get you to a place where you can replace your income with just trading the hour bar for 2 minutes every hour. That's it. You know,
Mm.
go to your chart, you have your entry, your exit, and when I say 2 minutes, you're not trading for 2 minutes every hour. You're just looking at it for 2 minutes. And then when the opportunity presents itself, you pull the trigger. You come back an hour later to assess where are we. That's it. And you have alerts. You have your charts. You don't need anything else.
Yeah, that makes sense. Um, yeah. Real quick on just the kind of outlook for the next week, because we just have such a action-packed couple of weeks with earnings. Plus, I think there's another Fed meeting coming up here in the next couple of weeks as well. So I'm interested to get your perspective on. I think you said your overall bias, like it's on the downside. But I'm just curious, especially with these earnings coming up and the fact that most likely, now that we saw Microsoft, Amazon's probably going to follow in the same kind of general direction for AWS, and then obviously retail. Um, there's probably going to struggle on that. Same thing with advertising, right? As we're kind of heading into kind of more of a recessionary environment for Google and Facebook. And then, so just because I think overall from a tech perspective, I feel like we're going to be more rough earnings. And I think Microsoft kind of set the trend today with, all the action that happened after hours. So would you kind of be more cautious here and just say, hey, let's just go through the storm, weather the storm, and then let's reassess once we get there, or would you still take a chance? And then what would be your overnight kind of risk in these types of scenarios if you say I am going to trade these next 2-3 weeks? Yeah.
So your question, I'm just going to say it this way. What I read in your question is that your trades are only bullish trades. When you say weather the storm, would you take a trade? I don't care what the market is doing. If it gives me a trade, I take it. Because my chart has already told me, do I want to take to the upside or to the downside? And if the setup is there, I take the trade. Right? The news doesn't tell me whether I should take a trade today or not. If the setup is there and there's no earning in that particular stock today, I'm taking that trade. I'm doing the broader market, unless Powell is speaking or there is non-farm payroll, but non-farm payroll happens before market open, so I'm not too concerned about that unless I have an overnight position. But if the chart says I'm going down, I'm going down. If the chart says I'm going up, I'm going up. Doesn't matter what sentiments are. Sentiment just helped me drive price in my direction. Right? When there's fear and I'm to the downside, fantastic. It just drives price further down for me. So it's your question is more like I want to treat trading like investing kind of question, which is different. Right? Trading is not investing. Trading
Mhm.
is making quick money out of the market.
Makes sense. Thanks, Beanie.
Yeah. We're good for today.
I think
thank
so.
you.
Yeah, I don't have any more questions.